Ladies and gentlemen, kicking your welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.5% there. On the S&P at 1.2%. Semiconductor did get hit 2.5% negative. Dow flat. Russell 2000 down 0.83%. Apple, Google, Amazon, Microsoft, AMD, Tesla, every single of these large tech stocks are down quite heavily today. Looks like Bitcoin is up. Gold, silver miners are up quite heavily, 4%. Dollar flat, oil up, treasury bond up. VIX popped about 15% there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. It looks like we actually saw that gap up this morning here. Bulls trying really hard to reprogram that micro-term moving average on that first hour, as you can see right here on that lower wick, right? So that means we gapped up here on the first hour. It came down. Bulls trying to protect that micro-term, trying to reprogram the micro-term, trying to renegotiate with the micro-term. So at one point, this thing actually thrived, but bears are making sure bulls don't even come close to this boss bear command center. Currently, the command center is at 437, that down gap area, right? This down gap area, as you can see, anytime when the bulls got close to that vicinity, boss bear shoot down the bulls. So as you can see on that first hour, that reprogramming is not successful. The second hour, we broke below the micro-term. If you guys remember from my last night's analysis, it needs to stay up at least 2 hours above the micro-term to fully reprogram that micro-term moving average. However, on the second hour, we blew right through it. And with that, obviously next in line is the short-term moving average. So keep in mind, the short-term moving average did support the buyers yesterday. You see that long, dragonfly doji there. So on the third hour, bulls tried it one more time, just right on that short-term moving average, but this time with the micro-term coming down, slashing the buyers mercilessly. So as you can see, on the fourth hour, we also lost the short-term moving average. So that's the micro-term, that's the short-term. So where is that gonna go? Once we lost the short term, of course, it's gonna go to the mid-term moving average, as we talked about on the last night analysis. And that mid-term is important because, as you can see, that's the prior resistance. Bulls worked really hard to reprogram that mid-term moving average. And ever since then, bulls were able to make good move here, and at least in a week or so. Now they are back here. As you can see, bears are not able to break below. Bears did break below the micro-term and the short-term in one day. But the bulls have the mid-term still working for the bulls, right? For now, as of today, the mid-term moving average is actually still favoring the buyers. I mean, we don't know how the midterm is going to do going into the next week. But that 431 is definitely an important level. As you can see, market is aware of this level. That's a prior resistance here, right? And if I actually go to the line chart, you will see how that 431 also is the level that coinciding with not only this recent swing high, but late September swing high as well, right? So that 431 is definitely that important pivot. The market is aware of that level. That's why we stalled in the last 3 hours. Bulls need to reclaim both of those moving averages and need to stay above both of those moving averages early on Monday morning, at least minimum 2 hours. And if they can do that, there's a chance bulls can able to go back up and try to battle with the boss bears one more time at 437. However, if the micro term and short term is too much pressure for the bulls here, and we lose the 431 and the midterm moving average here, we looks like the next known support is the long term, which is at 428, right? 427, 428, which is coinciding with recent swing high and recent swing low. So definitely that 427 is next known pivot, right? This is important pivot, 427.54. So we lose 431.08. We lose that midterm moving average to the downside. We're going to 427. If we win, I mean the buyers reclaim the micro term and the short term at least 2 hours tomorrow morning, we're going back to about 437. Check out that oscillator. As you can see, the oscillator has fully rolled over after putting in that bearish divergence yesterday. And I think even with this gap up, right? I think the reason why the gap up not able to sustain is because we also had the bearish divergence on top of it. So not only this is a level where boss bears are being very sensitive and emotional about this level, we also had that bearish divergence on the oscillator really weighing down to the buyers. So I think that's why on the second hour we lost that micro term moving average, and then the oscillator rolled over. We got a little uptick here on that oscillator, as you can see, but nothing really significant. We've seen the oscillator whipsaw before, so really we can't really trust any sort of a premature crosses or anything like that. There's a possible support here in the oscillator here. I'm going to show you real quick before I let you guys go. You can see coming from this low, and this low, that oscillator support coming up right here. That's could be the and once we get there, then oscillators are now entering into oversold zone. We're not technically there yet, meaning we still got room here. That means bears got one more day to push it down. Bears are not fully tired. They actually still do have energy should they choose to utilize it on Monday. So Monday is very, very important for both and bears because levels are pretty clear. Either 437 after reclaiming micro term and short term, or if we lose 431 in the midterm, it's going to 427. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening.